So recently Congress, through its inaction basically, allowed the interest rate on subsidized Stafford loans to double from 3.4% to 6.8%. Is this going to affect your life?
It definitely puts a damper on things. It's tough to pay back as it is, and to make it even more money makes it a little bit harder. Well, I'm back to school, so I can try to get a better job, so I would have the money to be able to pay off my loans.
Well, I just finished my freshman year at Drexel, which is about $54,000 for 1 year at Drexel, which is very expensive, and I can't afford to go there, so I'm going here, and then I'm going to transfer to Stockton, which is cheaper.
Okay.
I mean, it makes it difficult for people who are going into like tough career fields, that like ones that don't make a lot of money. Like, I think it's gonna definitely impact how much money I have starting, like how much I can afford and stuff after I start nursing. I don't know. Just like, because I have a lot to pay off, I'm not going to be able to afford as many things. Here for a full schedule is going to be under $2,000 for like a full packed schedule, and then at Drexel I have like $30,000 in loans after like getting like scholarships and stuff. So with all that, and I still have $30,000 compared to like $2,000 going here. It's like completely different. And it's like, I wish I went here my first year and then transferred somewhere else instead, because it'd be a lot cheaper. But the fact that student loan, like the price of schools is going up, doesn't help either. So I think here's like a good choice.
The student loans that I get are through my bank, where I have my checking account. So it affects me and it doesn't affect me, because it depends on how the bank decides that they want to go with raising the loans. I had Stafford loans my freshman year, it's my sophomore year. So if it had happened then, it would have really affected me, because I'm actually working in the school to help pay off my loans.
Is this affecting a lot of people who are your friends?
Yes, actually. One of my friends had to actually take out a second loan separate from the Stafford loan, because it's doubled, because it'll be very difficult for her to pay off the loan because of the raising percentage. So since the percentage raised, she's going to have to take a loan out for a private loan that's a lesser amount, so she won't have to pay as much.
I was just finishing a master's program through Fairleigh Dickinson at Burlington County College, and I am fortunate not to have student loans because of a family-owned business that was sold. If the family-owned business wasn't sold, that my husband had, we would have student loans. I also have two 22-year-old stepdaughters who are at Drexel. So the student loans and the grants, we wouldn't be able to get them. That's one of the reasons why we don't have them.
So are your daughters taking out loans now at Drexel?
No. They aren't, because of, we claim them. So they consider the income, even though it's not income, from a lot of, even if we still own the business, okay? So they look at the total profit. They're looking at solid ownership of things. We wouldn't qualify for loans at a lower interest rate. We'd have to go to personal banks, and we can't afford that, 3 people in college, there's no way we could afford that. We had to struggle for the last 5 years, really pinching money. If we had student loans, I couldn't imagine the interest rate that we would have gotten. It would have been horrible. Prior to getting my master's, I did have a student loan that I paid off. Student loan that I had before my master's, before I went back to get my master's, the interest rate was so low that it was paid off. It was easy for me to pay off. It was also easy to negotiate when I didn't have a job without hurting my credit. If I had to get a student loan now, I wouldn't be able to survive between health insurance and the cost of books and an interest rate that would put me in debt.